Welcome to this Tuesday edition of Inside India. I'm Sri Jegarajah. Here are your headlines. President Trump ramps up the pressure on Putin to end the war in Ukraine, threatening buyers of Russian oil with hefty sanctions in a major policy reversal, a move that would hit India and China. India's retail inflation slides to a six-year low as food prices continue to fall. That could pave the way for more easing from the RBI. And Tesla finally makes its entry into the Indian market, pulling up at its first showroom in Mumbai in a retail-first strategy, and a lot of questions if it will eventually make it in India. Welcome to the programme. Let's start things off by taking a look at our regional markets. And Wall Street was relatively modest in terms of the gains at the close on Monday. Regional markets, therefore, somewhat directionless. And in terms of the risk events and the risk factors in these markets, let's not forget about the Fed. And Fed policy pathway has been under scrutiny, particularly Fed Chair Jay Powell under pressure from President Trump, who said it would be great if Powell stepped down. So long-dated Treasury yields hitting multi-week highs. The market's somewhat uncertain as to the next steps in these developments and how to price this in. CPI on Tuesday and perhaps Q2 S&P earnings this week may provide some leadership and something of a respite from all the tariff chaos and the ensuing uncertainty in these markets. Right, Indian markets join us in about 45 minutes' time. Here's what GIFT Nifty futures are indicating. 25,165. So you're looking at a modest 100 points or so incline for the benchmark dollar-rupee exchange rate at 86.025. As we said in the headlines, US President Trump is threatening secondary tariffs on Russia if President Putin doesn't sign a peace deal with Ukraine in 50 days. This warning comes after Trump signed a landmark deal with NATO allies to send more arms to Ukraine, marking a big policy shift.
We can do secondary. We're probably talking about 100% or something like that. So we can do secondary. We can do secondary tariffs.
Legislation imposing up to 500% secondary tariffs on Russia is also being considered in the US Senate. In the meantime, after Trump imposed 30% tariffs on the EU, the bloc warning it will take countermeasures if there's no agreement with the US by August the 1st. President Trump, meanwhile, saying he is open to negotiations.
They would like to do a different kind of a deal, and we're always open to talk. We are open to talk, including to Europe. In fact, they're coming over, they'd like to talk.
And if the secondary tariffs on Russia come into effect, India could face a sharp rise in inflation. Russia now supplies about 40% of India's total oil imports. For now, headline CPI is on an easing streak, dropping to a six-year low of 2.1% in June, below expectations. Good rains have boosted farm output and kept food prices down. Vegetable prices falling further last month, down 19% year on year. That relief is also being seen in wholesale inflation, which cooled for the first time in 19 months. Now, electric two-wheeler maker Ola Electric's losses widened in the first quarter. Revenue dropped nearly 50%. Despite the losses, shares surged over 18% yesterday after this report card. Investors took heart from a slightly better outlook. The company now expects full-year revenue growth of 4% compared to last year's 7% decline. It's also forecasting gross margins to improve and reach 35 to 40% in the current fiscal year. Ola also said it has developed rare earth-free motors and accelerated those developments following supply curbs by China. And Tesla is opening its first showroom in India in about an hour's time. CNBC TV 18's Parikshit Luthra is on the ground in Mumbai waiting for the doors to open.
We're outside the Tesla showroom in Maker Maxcity Mall, Mumbai, BKC. This is Tesla's first showroom in India and their first official entry into the Indian market as well. final touches being given to the showroom behind me. There are 3 cars on display. One of them is a Model Y, which costs around $37,000 in America. And India, with a 70% duty, the cost would go up to about 52 to 55 lakhs for the Indian customers. There could be more cars showcased over the next few days. We're hearing that the company at around 10:30 a.m. this morning is going to give a timeline as to when the bookings will begin, when the deliveries would happen. And the deliveries for customers could take place between October to December or even January next year. Tesla is also hoping for a duty reduction. They are banking on FTAs with the United States and the European Union to make sure that the duties for Tesla cars come to India. Currently, all the cars that you see behind me, they're all coming from Shanghai. But once the India-EU FTA is done, the cars would probably be brought in from Berlin. This is a litmus test for Tesla, a pivotal moment for the company. If this experience of selling cars in Mumbai takes off and they see good volumes coming in, they could rapidly scale up and even consider manufacturing in the country. We hear for the moment there is a plan to launch a second showroom in India, in Delhi, by the end of 2025.
Litmus test for the Indian market, but Make in India is the real goal from the Indian perspective, the policy perspective anyway. Vietnam's VinFast is also entering the Indian EV market. Pre-bookings opening today for its VF6 and VF7 models. Right, I'm delighted to say Vivek Vadia joins us now, partner at Frost & Sullivan, to really thrash out some of these issues in the evolving EV market in India. First of all, how does Tesla's entry, Vivek, into the Indian market change the landscape for the domestic EV manufacturers from a competition point of view, perhaps?
So I would say Tesla, once it enters, it is more likely to impact the premium segment than the mass market segment where EVs are currently being sold. So as I see, entry of Tesla would be more of a threat to BMW and Mercedes and Volvo than Tata Motors, who's significantly selling cars that are targeted to mass market. So it's a different segment, it's a different outlook.
The aspirational goal is for Tesla to manufacture, to make in India. Daniel Ives, who is a well-known Tesla bull, Wedbush securities analyst, good friend of this network, he's optimistic. He predicts that Tesla will have a factory in India by 2026. Is that an achievable time frame?
It remains to be seen how this vehicle is sales in the market and what volume it captures. For now, from what I see, in India, cars are very heavily taxed. And unless there are any tax concessions, duty concessions, the price won't be competitive. And as you all know, for automotive plant to be sustainable, the volume required is quite high. And therefore, what sort of manufacturing it is, whether it is just an assembly, all this remains to be seen. But I think good goal to have.
It goes to the heart of the tariff issue, doesn't it? And for India, auto tariffs or tariffs on auto components are very elevated, in the region of 110%. Do you see them coming down, or is this another red line in these trade negotiations with the US, like agriculture, that is non-negotiable? India is not going to budge on this to protect the domestic industry.
I have a very, I would say, diverse opinion on this. On one hand, it may be a red line because this is auto industry in India is a pillar, and you have multiple domestic manufacturers to protect. So it is definitely something that government in India who's focusing on Make in India, where automotives are already being manufactured in India, it is very unlikely to let the duties go and get flooded with the components. But also, on the other hand, the kind of cars that get sold in India are quite different than what get sold in US. So even a mass market car in the US is a premium car in India, because the cars that are sold are very small 1 liter kind of cars. That's the bulk of the market. So on one hand, the government has to protect the auto component industry in India, but on the other hand, even if they let a few components come in, I don't think it impacts the core of the market.
The sheer size of the Indian market and its growth potential, that cannot be ignored. That's the big prize. But is the business environment, regulations, taxation framework, are they all pulling in the right direction? Is it consistent and is it clear enough to attract foreign car makers?
I think there are enough and more car makers in India. The growth does not necessarily depend on attracting more car makers to India. I think the growth necessarily depends on 2 or 3 things. One is infrastructure development. The road penetration is still, the quality of road, the kind of roads that are available, it's still, I would say, there is a headroom for improvement. And number 2, the affordability of the customers. These 2 are the main constraining factors. It's not really the entry of any other car manufacturer or expansion of production capacity. That's not the constraint at all.
Let's address one of those bottlenecks, and that is EV infrastructure. So where is India in developing and building out charging stations, etc., the power grid and the logistics that could facilitate the growth of this market?
So we have to look at EV growth in India market differently than the rest of the world. Because in EV in India is predominantly 2-wheelers and 3-wheelers and not the cars. Like if you and me have to discuss EV of global market, we'll talk about BYD and Tesla. But that's not the growth driver as far as India is concerned. It is mostly 2-wheelers and 3-wheelers. And that's where the demands on charging infrastructure are rather limited. You will see there are many 2-wheeler users who would actually charge the vehicle from home. And that does not require you to set up any charging infrastructure at all. So I won't say, again, that's not a constraining factor.
But then again, time will tell, but is Prime Minister Modi's long-term objective of 30 by 30, 30% EV penetration by 2030, and the subsidy framework that goes with it, is that fit to purpose? Is it achievable? Is that timeline too aggressive, perhaps, or does that need to be re-evaluated and go back to the drawing board?
Yeah, I would say it needs to be re-evaluated for the simple reason because if you're manufacturing EVs, you still don't have batteries.
Because it's only about in the single digits right now, isn't it?
And they may change the definition, tweak the definition in such a way that it looks like they have achieved it. Because as far as 2-wheelers are concerned, you're already 50% is sold as battery electric vehicles and 50% are IC engine vehicles. But what India probably needs is not just the EV, they need a comprehensive fuel strategy, and which can include alternate fuels, which can include CNG, because manufacturing EVs is not something that fits into the core of Indian manufacturing because they don't have battery. If more EVs you sell, more imports you do from China, and I'm not sure if that is what you want to do.
Who's winning then in India's EV market?
I think anywhere in India or anywhere in the world, forget India, anywhere in the world, if EVs go up, China wins because they are the ones who are manufacturing the batteries. We just tend to look at the cars and we just tend to look at the completely built vehicles. But the real winners are the batteries because that's where 50% of the value is captured, and that is what is China is the leader. So I have continued to say in your programs that anywhere EV sales, it's actually advantage China.
But do you think in time India could eclipse China as a global EV manufacturing hub?
It is unlikely because the kind of gap that you see is very, very wide. And secondly, unless you have the entire battery and related value chain, like the lithium, the minerals that are required to build the battery, I won't call it a winner. Even if you manufacture like 10 million cars and just assemble and sell, ship out of India, my question would be where the battery is coming from. And if it is not coming from India, then what have you achieved?
Well, back to the Chinese automakers, if we can circle back there, Vivek. Exporting EVs to India is one thing. Do you ever foresee a situation where Chinese EV makers like BYD could invest and build factories in India, or is it a whole different challenge?
it's a whole different challenge. They may want to sell after Tesla enters. If the response is good, BYD may enter the market. They will test the waters. If customers like the vehicle, if they are more price conscious, then probably yes. But I would say that that has a lot of political red lines to cross before they are able to set up the factory in India.
Let's bring in the Americans. And Ford recently held talks with Tamil Nadu's Chief Minister, M.K. Stalin. There have been numerous attempts by Ford to crack into the Indian market, but there have been setbacks. Do you think that there could be some renewed engagement, and do you think that they could make a comeback?
So I would say American attitude towards entire Asia, not just India, has been blow hot, blow cold. It's not just India. You take Indonesia, you take Thailand. They have set up factories and then they have come back. So I think they need to be a lot more convincing and persuasive to the governments before they can attract any significant attention or any kind of subsidies or interest from the regulators.
Vivek, my producers just told me that Tesla has just released the prices for their Model Y on their website. This is for the Indian market. Tesla prices the Model Y on road price at 6.1 million rupees. Prices the Model Y rear-wheel drive at a cash payment of 5.989 million rupees in India. So clearly targeted at the premium end of the market. The Model Y long-range rear-wheel drive cash payment of 6.8 million rupees in India. What do you make of this pricing environment? And are they going to find buyers at the premium end of this market segment that they are looking for?
I won't say that they won't find buyers. The question is how many. Because in India, of course, as you have poor people, there you have ultra-rich people as well. And Tesla is most likely to become the status symbol for them. So I won't say that these prices is completely out of range, because you'll find buyers in India for all price points. The question is whether they are going to threaten the mass market. The answer to that is no, because the most popular selling cars probably sell at 1/10 of this price. And that's the reason why I won't say mass market will be impacted at all. It would be the rich and famous who would drive Teslas.
How much of a price war, if any, is going on in the mass market for EVs in India?
I would say Tata is clearly leading it, and of course there are some tactical price discounts that happen, but I still don't see that as an issue for growth of the market. I think the portfolio is just about 2 to 5% of the total sales, and therefore most of the OEMs are in the investment phase. So there would be some discounting that happens, but I don't think that's a constraint as far as the industry is concerned.
Tesla in the premium end of the market in India is going to be going head-to-head with the big names like Mercedes and BMW. Mercedes released some pretty good figures, some pretty robust figures recently for Indian market sales and ICE engine and EV sales. How competitive is that premium market segment going to be for Tesla in India?
So that's a very competitive segment, and they would face now, if Tesla starts doing well, you can expect BMW and Mercedes to bring in their EVs into the market as well. I don't think they are going to just let Tesla have everything and not compete at all. So it would be an interesting segment to watch, and it would be fiercely competitive. They may be competing for lesser volumes, but that doesn't mean the competition would be any lesser than mass market.
We've also been hearing that VinFast is entering the Indian market. What's the business model that they bring? I mean, are they somewhere in between mass market and premium end, and how is that being priced, and are they going to win over the Indian consumer? And again, Vivek, is there a commitment here maybe on the horizon to manufacture in India?
Correct. So I think VinFast is a completely different value proposition altogether, because it's an unknown brand. and therefore they'll have to stand on the product advantage or the product strength that they present to the customer. Without a strong product and without attractive pricing, they will not be able to cut ice because nobody has heard of VinFast in India. And so they will have to place themselves somewhere in between the mass market IC cars and Tesla. I don't think if they try to position themselves as an ultra premium, they would succeed because the brand is unknown. And in order to do that, they will have to have a very strong product and with strong features and very attractive price.
Vivek, we've got to wrap it up there. Suffice to say, batteries are absolutely critical to the market outcome in India. Thank you for that analysis. Vivek Vadia there from Frost & Sullivan. Coming up on the programme, SCO Foreign Ministers meeting kicks off in China. India's S. Jaishankar is also at this venue. We will bring you more details of the discussion areas there after this short break. Welcome back. NVIDIA says it will resume H20 sales to China and will have a new fully compliant GPU for the country. In a press release on its website, the company said CEO Jensen Huang met President Trump and US policymakers late last week, where he reaffirmed NVIDIA's commitment to creating jobs and onshore manufacturing. Huang is expected to hold a media briefing in Beijing tomorrow. According to the Financial Times, he's also hoping to meet Chinese Premier Li Qiang and Vice Premier He Lifeng. Now, China's GDP growth numbers coming in slightly better than expected, but challenges still remain amid the trade war with the US. Elaine Yu joins us now with a breakdown of the numbers and the expectations going forward. Elaine, good morning.
Hey, Sri. So GDP in the second quarter in China grew 5.2%, and industrial production was up 6.8% in June. So that shows that China has so far weathered the tariff storm quite well, and that's supported by strong exports. We saw from the trade data yesterday, too, that exports to ASEAN countries and the EU have largely held up, and that helps offset the falling exports to the U.S. The question, of course, is what's going to happen in the second half of the year as countries around the world negotiate tariffs tariffs with the U.S. And economists expect exports to slow in the second half of the year, where there's payback for front-loading shipments ahead of the U.S. tariffs. And in terms of consumption, the other slice of China's two-track economy, June retail sales were up 4.8%. So that's coming down from a very strong May when retail sales rose 6.4%. So this really shows that the earlier retail strength that we saw was heavily driven by state subsidies, such as the trade-in programs for cars and home appliances. And that underlying demand is still softer. And, the June data also points to the ongoing housing slump. The new home prices in June fell 0.3% month on month, and that's the worst drop since October. So that is going to weigh on consumer spending and confidence. So overall, good numbers for now. The government is on track to meet its 5% GDP target this year, but underlying indicators may point to trouble ahead as China fights a trade war and faces persistently soft demand and an ongoing property slump at home. Back to you.
And that's D word deflation to contend with as well. Elaine, thank you very much indeed for that report. Now, foreign ministers from the Shanghai Cooperation Organization will be meeting in Tianjin, China today. Indian Foreign Minister S. Jaishankar was in Beijing ahead of that and held talks with his Chinese counterpart. While border tensions remain, both sides are stepping up engagement. Jaishankar also called for removing trade hurdles to boost what he called mutually beneficial cooperation.
As neighboring nations and major economies in the world today, there are various facets and dimensions of our ties. Measures towards normalizing our people-to-people exchanges can certainly foster mutually beneficial cooperation. It is also essential in this context that restrictive trade measures and roadblocks are avoided. I hope to discuss these issues with you in further detail.
Coming up, airport, lounge and restaurant operator Travel Food Services made its market debut in Mumbai yesterday. We will bring you an exclusive conversation with the company's MD and CEO after this short break. Don't miss. Welcome back. We are counting down to the market open in India. This is how we are shaping up. Let's give you futures one last time before we get to the market proper in about 15 minutes. 25,173 is where we are expected to kick off. So we're looking at an incline of just under 100 points or so, given that we left off just a tad over the 25k mark yesterday. Dollar rupee exchange rate is once again nudging closer, looking to test 86. 85,958 is where we stand. Now, a muted market debut for shares of airport, restaurant and lounge operator Travel Food Services. The stock opened at a 2% premium to its offer price, but reversed those gains to close lower. The company is valued at $1.67 billion after the listing. It runs big names like Jamie Oliver's Pizzeria, Krispy Kreme and KFC at airports in India and abroad. Analysts say uncertainty over India-US trade talks did weigh on sentiment. The IPO was an offer for sale, with the Kapoor family trust selling nearly 14% stake. I'm delighted to say Varun Kapoor is joining us now, Managing Director and CEO of Travel Food Services. Varun, great to have you on Inside India. Just help us understand how TFS is positioning itself for growth in the long term, despite the short-term volatility that we saw yesterday during your debut.
No, hi, Sri. Thank you for having me part of your show. So no doubt, I mean, we very simply, like we explained, we operate in two segments in aviation, travel, QSR and lounges. We run these across airports in India, 14 airports in India currently, 3 airports actually in Malaysia as well, and 1 in Hong Kong. And if you see the Indian market particularly, it's been a fantastic growth story, I think, across the Indian market, but I think more so even in aviation. Some of the investments the government has been doing, private airport operators. We've truly seen the last few years, new airports coming in, the way the whole development, the aircrafts, significantly increasing in the market. So, all of that coupled together, the tailwinds have been extremely strong. Expect that to continue to be for the years ahead. We've been the third largest aviation market currently and expected to grow 9 to 10% growth rates over the period. Now, in terms of any market, whether seasonal or short term, you always see a month or two maybe in terms of growth, but it's always been growth, just the level of growth there. But I think long term, those structural trends, which is the way we look at our business, right? We have long-term contracts, 8 to 9 years with most airport operators, and things look as robust, if not more robust than ever, in terms of the Indian aviation story and if the Indian consumers, experiencing concepts and brands at airports.
Varun, let's talk about what's over the horizon in India. You operate in 14 airports, I believe, within India. Given the fact that the government seems to be very focused on building and developing aviation infrastructure, commercial aviation infrastructure and the airports in Tier 3 cities and above, is that an opportunity for TFS?
No, undoubtedly. So I think the opportunity tremendously, while we've been largely at Tier 1 and Tier 2, I think the development, the immense investments the government is doing around new airports, developing existing airports. I mean, you fly through India anywhere, whether it's Tier 1, Tier 2, Tier 3. You see the way terminals are being upgraded. You see the way runways, infrastructure across the board. It's tremendous. You see the Udan scheme, for your viewers who are not aware, the government actually in encouraging travel on a much wider spectrum of the Indian population. The reason why you're seeing the growth rates in India on traffic. I think no doubt we go wider as these airports become larger. They become truly an opportunity for us. And yes, the brands we get, it makes sense as airports get a bit more passengers, but that's happening across the spectrum in India. You see the way growth has been last few years is just accelerating, which is, I think, a great opportunity for our business, for aviation, and ultimately connecting the country for consumers in India to move around, whether leisure or for business.
Can you talk more, Varun, about the fundamental picture, including the debt-free status and the positive cash flow? And at what point do you think that's really going to start resonating among investors?
Sure. So I think we've been, as a business, we're lucky to be, yes, the country, at the right country, we say the right time in the right industry, right? It's worked out quite well in a sense of the business opportunity. And I think we've partnered quite closely with airport operators who do a great job in India. I think run some of the best airports globally, if you see the way it is. So we as a company have been the last few years To give you a perspective, we've grown quite consistently over the last many years. We are today a company that has a PAT of about 3.8 billion INR. We grew from about 3 billion last year, so 20% growth, a bit more than, or 27% growth, 20% the previous year as well to reach 3 billion. So it's been consistent growth on our side. These are PAT numbers after tax. In terms of our position, we have no debt on the business. We've grown the business consistently and quite disciplined, and in a sense, conservatively, we have more than about 6 billion on our rolls in terms of cash available for development capital, because of the market itself, the opportunity of growth both for us in India, but even internationally. We went into Malaysia recently, Hong Kong as well through a joint venture there, and the opportunities of growth for us, both in our home markets, but internationally as well, with lounges particularly, is something we really look at. So that's, I think, an interesting opportunity available for us.
Absolutely it is, Varun, and you preempted my next question. What's next then globally for TFS? If you're in Malaysia and Hong Kong, and to what degree does it help, and can you leverage off your joint venture partner, UK-based SSP?
So no doubt, we've got, I think the business is built on the strength of a great partnership among two promoters. We have two shareholders in the business, SSP, based in the UK, and K Hospitality, a strong Indian promoter with 50 years of experience in the Indian market. So I think that coming together, it's been a 16-year journey for the business, reaching where we are today. And yes, no doubt in India, we're a market leader by a significant margin. But internationally as well, I think some of those practices, the lounges that we've developed in India, I think stand out globally. We've got a lot of recognition for them. So we've taken that product to other markets as well, leveraging that relationship with SSP, who's actually present in many of these markets on the travel QSR side. They have client relationships, well respected, leveraging that relationship with our lounge expertise where we stand out is something. So hopefully should we come in the market near you, and maybe when you're traveling next, or what your viewers are, they would see a TFS lounge at airports, not only in India, but internationally as well.
Absolutely, Varun. I might take you up on that offer, but are there, the runway, it's very clear that the runway in India is very long and very exciting. But in terms of a diversification strategy, do you plan to shift the business out of the core F&B and lounges into perhaps areas like duty-free, perhaps areas like in-flight catering, which look as though they are natural next steps and natural fits for the future in terms of diversification? Is that a plan?
For us, I think the path is quite clear. So starting off, I think India is going to be the core of our focus. That's continue to be. I think that's, while, yes, we're going internationally, we see ancillary opportunities to leverage our expertise in lounges. But India very clearly is where the runway for us, if I can use an analogy from aviation. And you see the way it's played out in India, growth has been tremendous, but the next 10 years, it's expected, just our industry of airport travel, QSR and lounges, expected to grow more than 20%. That's a CAGR of 20% over the next 10 years. So there's ample opportunity in India. That's just if you maintain market share. We're going to grow market share. That's our aspiration. We're going to create value for all stakeholders, all shareholders, and continue to grow the business. So the industry itself in India is expected to grow about 20%. So in a scenario like that, we don't see a need to look beyond travel, QSR and lounges. We know that well. We have expertise there. We had market leadership, and we perform financially well. It's because of our clear focus. I think that won't change. That's a clear strategy on our side. Because of the runway, right? Why would you look elsewhere when the growth opportunity is tremendous in the area where it's self-operating? So I think that's the strategy that we have at TFS.
Varun, just two questions just to round off with. Have you got a line of sight on the peak summer travel season and demand season is just hitting its stride now? Do you have a line of sight on how that's going to work out for you in terms of demand in the short run? And are you finding the right people to be the barristers, to be the waiters and the waitresses, and to really take charge of this of a consumer-facing role as this one in the airports?
Maybe the first part of your question, in terms of where, travel in India has been very robust. It has been growing consistently for the last many years. Even, in this, I think the month of June, I think it was about a 5 or 6% if I saw the latest statistics. And that, is with, that's been a quite robust. very different from the rest of the world in terms of travel. So I think India, in terms of travel, aviation, just structurally the way our consumers in our country are aspiring, per capita incomes rising, people are looking at experiences and business travel as well. I mean, that's structurally growing as business in India, as your viewers would see in many of the segments you've covered as well. So I think that piece is very strong underlying. And yes, you have seasonal, maybe during when people are traveling for holidays or festivals in India, you may see a slight jump. So those effects are quite consistent year on year. So we've been a very robust growth. I think the second part of your question, actually, sometimes where you've asked the thing bang on your head. We're a service business. We sell food, but it's not only food, right? It's the design of the outlet. It's the service you get from the team members. It's the smile when you're leaving our outlet as well, right? So getting the right people is the big part of our journey. And I think we focus a lot on that. We make sure we're a great place to work. We want to, get the right teams in there. I think in the market in India, there are so many aspiring people. This is really interesting. We work with the best brands. We're very particular about the way we run our business, in terms of making it employee first. And ultimately, if your team members are happy, they create a great experience. That's what our business is all about. It's services, so we can leave lasting memories for consumers and have delight when they come through our outlets.
Varun, wonderful conversation. We'll leave it there. So thank you very much indeed for joining me. Varun Kapoor there from Travel Food Services. Right, we are getting some live pictures that we wanted to show you of Xi Jinping and the Australian Prime Minister, who are meeting currently to discuss trade and security. Australian Prime Minister Anthony Albanese there is speaking there live in Beijing. We'll bring you more details as we get them. Now, we are counting down to the market open in Mumbai. We're back in 2 minutes. Welcome back. We're just going to bring you up to speed with some lines coming through from Beijing. You can see the talks between Australian Prime Minister Anthony Albanese and Chinese President Xi Jinping and Premier Li Qiang in Beijing. And here are some of the highlights of those conversations that are starting. Prime Minister Albanese, in a meeting with Xi, says we value our relationship with China and welcomes the progress on cooperation on free trade. Xi Jinping says China is ready to work with the Australian side to push bilateral ties further and make great progress. This is a meeting that is aimed at recasting a relationship that has often been quite challenging between Australia and China. But increasingly, there is talk of diversification, bilateralism in an era where US tariffs are causing no end of chaos, arguably, and uncertainty in the global environment. So Australian Prime Minister Albanese discussing trade and security in this meeting with Xi Jinping in Beijing, China. Right, Indian markets are joining the trading day. Nifty 50 is looking like this. So looking at an incline of about, modest one at that, about 0.2%. So 25,145 is where we stand. Dollar rupee exchange rate is pivoting around this 86 level, just below that handle at 85.95. Some of the movers in the Indian markets today, let's take a look. IT services firm HCL Tech reporting mixed Q1 results. Revenue rose 8.2%. That beat estimates. Net profit, though, fell nearly 10%. HCL Tech CEO said demand remains stable, though uneven across sectors. Company raised the lower end of its revenue forecast for the fiscal 2026, but cut margin guidance to 17 to 18% amid cost pressures. The firm will also restructure operations, exiting unused facilities outside of India and scaling down talent in select regions. Let's give you precious metals now. Gold and silver specifically. Spot gold at $3,356.68. Silver at $38.10 an ounce. Indian investors globally, meanwhile, are turning to silver now as the precious metals returns this year have outpaced gold. Let's bring in Rajesh Khandan now, head of wealth and retail banking UAE, and also the head of global Indian at Standard Chartered. Rajesh, great to have you on the program. The Indian diaspora is evolving and now has a more global investment outlook. Where does the Emirates fit into that landscape, and what's the value of proposition that Standard Chartered can offer both its domestic and non-resident Indian clients?
Sri, thank you very much for having me here. Delighted to speak to you about a topic that's very close to my heart, the global Indian. Let me start by talking about the definition of this client. This is no longer just the traditional non-resident Indian that most of us have known. It also includes the resident Indian who, as you right now said, have an increasingly global outlook on everything that they do in their life, whether that is personal, business, family, or more importantly, the way they manage their wealth. So looking at this shift, what at Standard Chartered we have tried to do is to bring together a proposition that addresses this shift for these clients. So we provide three key aspects to them. The first is seamless international banking that allows them to manage their cross-border banking requirements. The second, a comprehensive set of wealth solutions, especially anchored around our 4 international wealth hubs, and that is Hong Kong, Singapore, UAE, and Jersey. And finally, in order to manage all this, a human touch with digital relationships. So full-fledged relationship managers who are INSEAD certified and award-winning digital platforms that allow these clients to access these investment opportunities, especially from our wealth hubs.
Can you elaborate, Rajesh, on what exactly the draw is for the UAE? Is it golden visas? Is it the UAE's favourable tax laws? Is it zero income tax? Or is it factors beyond that that are compelling Indians to gravitate towards this wealth centre?
So, taking off from the previous question and to answer this, Sri, the UAE and especially Dubai is emerging as one of the world's largest financial centers. In fact, if I'm not mistaken, the recent report showed that this is the 7th largest international financial center in the world. So a number of factors, and all of those points that you made earlier are all true. Indians are increasingly are more mobile in their global outlook now. they are moving overseas. They intentionally create these moves in order to support their businesses, to support their families, and all of these aspects, whether you talk about it from immigration, which is the golden visa, or you talk about the ease of doing business in the UAE, which has significantly changed over the course of the last few years, or you talk about rule of law, integrity, stable regulations, all of those are attracting these global Indian clients, not only from India, but from all over the world, to make the UAE as one of their primary locations, or at least one of their additional locations for doing business, as well as a location as a second home for many of them.
I see. Rajesh, can you talk about the flows picture? What is that telling you about confidence levels and sentiment amongst these high net Indian clients and investors, given this global macro uncertainty? Or is it the case that the Middle East, because it's less impacted by tariffs right now, is relatively ring-fenced from the global slowdown and the tariff-induced uncertainty?
Yes, Sri. Certainly, the global uncertainty has caused a certain level of caution for all our clients, high net worth individuals included. Having said that, the confidence level for them in the places that they have invested into, and especially in the United Arab Emirates and the Middle East, continues to be fairly strong. Having said that, I think the investment philosophy for most of the global Indians is going away from it being very concentrated into one location into global diversification. So even resident Indians are looking at the same opportunity to say, how can I invest globally and participate in global markets? So they continue to stay diversified, and that's what we have seen. We are also seeing them move away from traditional assets, which could be deposits or real estate, and actually be more open to alternatives, private market, and equities, for instance. So yes, a fair amount of caution, but they remain confident in many of their investment flows that they are making today.
How do your NRI clients who are working or living in the region, in the Middle East and in the Emirates, feel about the investment proposition and the opportunities back home in Mother India? And how have international financial services centres within India, like Gift City and other special economic zones, perhaps enhanced the Indian value proposition for NRIs?
Yeah, great question, Sri. And it's a question I love talking about because Indians, no matter where they are, especially global Indians, continue to have a very strong connect back into the home country, which is India. It's sometimes a bit of a love-hate relationship as well, because on the one hand, they love doing many things back home, but they also perhaps sometimes do not like the complexity of the investment process that comes through, or, for instance, the dollar-rupee depreciation that seems to eat into their returns. But notwithstanding, they continue to be extremely confident about India's economic growth as well as prosperity and the opportunities that arise from there. So we do see a fair amount of the global Indians continuing to invest back into opportunities in India. And I believe the value proposition that some of the financial centers are likely to provide, especially, for instance, Gift City, will go a long way to address some of these concerns for clients. It's early days. I mean, we have a great operation for our corporate and institutional banking in the Gift City, and we are working closely to actively launch a wealth and retail banking proposition there. But Gift City is potentially the gateway for global Indians to be investing into India, and not only global Indians, potentially even all other international investors at some point of time in the near future.
Interesting. Rajesh, just how diversified within the Indian market and diversified globally is your client base over there in Dubai and in the Emirates? Because if I'm not mistaken, NRIs have traditionally focused on deposits and real estate. What does the diversification momentum look like in terms of the spread into global equities, funds, private markets, structured products perhaps, and international portfolios?
Actually, a lot of our clients, global Indians, especially in the overseas markets, let's take the United Arab Emirates or Singapore, have started being very open to going beyond these traditional assets. So we do see flows from them into equities, into alternatives, into private markets, as well as structured products. I can't place the exact number for all of these for you from a portfolio standpoint, but they do follow a fair amount of what we advocate as an asset allocation for them from our global advisors. And we see those flows actually happening with our clients in the market, both in the UAE, in Singapore, and many of our other markets where we have global Indians as clients.
Rajesh, I did want to touch on how your investors feel about gold, silver, Bitcoin and the US markets, but we are just out of time. Thank you very much, sir, for joining me on Inside India. Rajesh Khannan there from Standard Chartered. Right, I'm afraid that's all the time that we have today on Inside India. Do keep watching CNBC. Dan Murphy is up next with Access Middle East. Have a great day.